So now I'm going to demonstrate exercise 1-17, a homework assignment. To do homework assignments, pre-tests, and tests, we need to log into our account that we set up in myaccountinglab.com. If you have not set up your account yet, then you'll need to watch one of my previous videos in which I show you how to register. Once we are in myaccountinglab.com, we then click on Assignments. Then we click on Do Homework. Now we want to start off with Chapter 1, so I'm going to filter this so that it shows only Chapter 1. Then we're going to click on this assignment, Exercise 1-17, Users of Accounting Information. And then as I go through this, I will give you some explanation about why certain users are internal and certain users are external users. Remember, in myaccountinglab.com, you can do homework assignments multiple times and your highest score is recorded. Most students work the assignments multiple times until they get 100% on their homework scores. The more we practice, the more we learn. All right, so here will be the list of the versions of E1-17, exercise 1-17. Usually there will be two versions, one where the numbers are all the same for every student, and then the second version will be where the numbers are randomized for every student. But this problem does not include numbers, so it's just going to be a book static. What book static means is this is the exact same problem in the book, and static means it does not change. Every time you take this problem, it'll be the exact same. Later on, we'll find some that are called similar to exercises. The similar to exercises means that every time we take that, or every time we try that homework problems, the numbers will be randomized. So the purpose of this assignment is to get you familiar with all the different users of accounting information and why they would need accounting information. We are to choose whether these users are an external decision maker, represented by an E, or an internal decision maker, represented by an I. Internal user simply means they work for the company, while external user means they do not work for the company. So we'll start with customers. Obviously, customers are external users of accounting information. But why would a customer need to know the accounting information of a company? Well, let's say you're going to purchase a car from a publicly traded car company like Ford or General Motors. Publicly traded simply means that the company is traded on a stock exchange, and all publicly traded companies must publish their accounting information online, such as the income statement, which shows if the company is profitable or not. So let's say you were thinking of buying a car from a company, but when you looked at their income statement online, you saw that they haven't made a profit in the last 5 years. Do you really want to buy a car from a company whose chances of going out of business are pretty high? Probably not. Next, we have company manager. Obviously, they work for the company and therefore are internal users. Why do they need to know accounting information? Well, for one, they need to know the salaries and bonuses that his or her employees receive. The company manager also needs to know which products and services are profitable. And the manager's bonus might be tied to staying under a certain budget number. So that manager also needs to have access to the budget numbers. This, of course, is all accounting information. Now, how about the IRS, the Internal Revenue Service? They are an external user. They do not work for the company. But why does the IRS, or any taxing authority, such as the Washington State Department of Revenue, need to know your company's accounting records? Well, for one, your company will pay income tax depending on the company's profit. So the IRS needs to know how you calculated the company's profit or loss. Also, the IRS needs to know how much you paid your employees to make sure the employees pay the proper taxes. And the Washington State Department of Revenue needs to know the amount of your company's sales and the type of your sales to determine if the company needs to pay any sales tax. Next is lender, such as a bank. The bank is an external user. Why would a lender want to know your company's accounting records? The lender wants to know the level of your company's debts, how much profit your company is making, and the amount of cash that you have to see if your company will be able to pay back the loan in the future. Now, let's talk about investors. Obviously, investors are external users. Investors, just like the bank, want to know if your company is profitable. They also want to know the level of debt that your company has. Because if they think you're going to go out of business, an investor will not want to buy your stock. Next is controller. Well, first of all, we have to define what a controller is. A company's controller is the chief accounting officer and heads the accounting department. The controller is responsible for the company's financial statements, general ledger, cost accounting, payroll, accounts payable, accounts receivable, budgeting, tax compliance, etc. Later on in the quarter, we'll learn what most of those vocabulary terms mean. So a controller is an internal user. And obviously, we'll need access to the company's accounting records. Now let's talk about a cost accountant. What is a cost accountant? A cost accountant's job is to see how much it costs to make the company's product. For example, the cost accountant for a cell phone manufacturer will need to calculate how much it costs to make the cell phone. Only then can the company determine how much to sell it for. Cost accountants work for the company and are internal users. And finally, we have the SEC. The SEC is the Securities and Exchange Commission. They are part of the federal government, so they are an external user. But why do they need to know the company's accounting information? The SEC needs to receive the company's income statement, balance sheet, and other financial reports so they can make that information available online to investors. Now let's say I make a mistake. I'm going to say SEC is internal. I'm going to say an investor is internal. And I'm going to say a customer is internal. When I click on check answer, it gives me a warning that I made a mistake. Now read this box carefully. Most students will end up hating this box so much that they will close it as soon as they see it. But you should read this box because sometimes it gives you a good clue. Sometimes it does not give you a good clue about what you've done wrong. This one says one or more items A, B, and or C are incorrect. Review each user listed and identify if the user is an internal or external decision maker. Please try again. So let's say I change this, I check again. Sorry, that's not correct. And then I change this and I check again. Notice this now says final check. It says, sorry, that's not correct. You've exceeded the maximum amount of tries. So you get 3 tries within the homework problem. Incorrect answers will be marked with red arrows. Tap on the red indicator to see correct answers. Okay, so what it's done now is these little red triangles, this means that I've gotten this wrong. So if I wanted to see what, it also, my accounting lab puts the correct answer here. So company manager is an internal user. Now if I want to see what I put in there, I click here and it says you answered E, external user. Now obviously, if I got it wrong and the answer is I must have input E since there's only 2 options. But later on, when we put in numbers, this little feature will be handier for us. So you might be saying to yourself, I thought we get unlimited tries to do the homework. Well, within the homework problem, you get 3 tries. However, notice I can try again. So if I want to get 100%, I click on try again and it lets me try it again. And notice the score that it gave me in my first try was 0.63 out of 1 point. So I got 63%. Also, it tells you the percentage over here. Now to earn a score of 100%, I can start the problem over again, and my highest score will be recorded.